Hi guys, welcome back to my channel, Host Talks Investing. So in today's video, I'm going to be covering my month 2 portfolio update. There have been some massive changes from my month 1 portfolio update, so definitely stick around and watch the whole of the video to see exactly what's changed. Also, if you're a first time viewer or a returning viewer and haven't yet subscribed, can I kindly ask you to hit that subscribe button and follow me my journey to £1 million. And one final thing, if you're thinking about starting your own investment journey, I have a link to the trading platform I use, Trading212, and if you use that link and deposit £1, both myself and you will receive one free share worth up to £100. So it's definitely worth considering. Okay, so let's get started. So we'll first start with my invest portfolio. So as you can see, the amount that's invested within the invest portfolio has gone down considerably from my previous month. And the reason for this is because I sold almost everything in my invest portfolio and moved to my ISA account. And in the future, I'll make another video discussing exactly why I did this and all the additional maybe mistakes I made in my first month of investing. So yeah, stay tuned for that in the future. So for the moment, I'll just go through what I've actually got in my invest portfolio and what I've added. And the reason I added these shares in my invest portfolio was because they were not available in the ISA account. So the first company I have in my portfolio is called Alpine 4 Technologies. And this is a new addition to my portfolio. And again, it's only a small holding and it's currently down by 2.46%. But I do plan on investing in this for the long term because I feel like there's considerable scope for growth, and that applies to a lot of these companies in my invest portfolio. These are all companies I plan on holding for the long term because I feel like, again, there's potential growth there. And the next company is American Battery Metals. Again, a very small holding, and I'm actually down by 24.91%. I'll keep adding to this and bring the average down. The next company is CD Projekt, and this is again down considerably by almost 20% or £96.90. And for those of us who actually are gamers, you probably know the reason why the share price for CD Projekt is so low. Unfortunately, the release of the newest title, Cyberpunk 2077, had a number of issues on some of the older consoles, and it actually left CD Projekt issuing refunds and the game being pulled from both the Xbox and the Sony PlayStation Store. However, I do feel like, again, once the bugs are ironed out by CD Projekt, the share price picking up again, because again, they're a great company that do care about their consumers, and they had similar issues in the past with the previous title, The Witcher 3. And again, I remember when that was released, I had a number of issues, and the developer did release a number of patches to address those. And in fact, even with all those issues currently, the company has more than recouped all the investment they put into developing the title. But again, I do feel like there's still room for growth within CD Projekt. So yeah, I'll maybe not add to it for the moment, but I'll probably just let that price pick up again, which I'm pretty certain it will. Again, the next company is another new addition to my portfolio. It's called Corporate Universe, and it's a very small holding of £2.64, and it seems to be one of the only two that's actually in the green, and it's up by 9p. And at the moment, it's a very small holding, so I will add more into this company. And the next company is Galaxy Next Generation, and this is a company I'm very excited about. And at the moment, I've got 1,113 shares, or valued at £25.26, and it's currently down by 5.75%. But as I mentioned, I'm very excited about this because I feel like this is a great long-term hold, because the company develops both hardware and software that allows the presenter participant to engage in collaborative instructional environments. So I think because of the current COVID situation, this is a great platform for schools and universities, etc., to offer the alternative where there's a classroom learning based software which maybe is more user friendly for those sorts of institutions than maybe the standard Zoom and Skype and Microsoft Teams. So yeah, I'm very excited about this, and I'll continue adding to this and growing my stake within this organization. And the next company is Nano Dimensions, and again, I've got a very small holding in this, and it's currently up by 10.6% or £1.20. And again, it's only 2 shares, so this is another company which is a great company, I think, and they're a 3D technology printing company, and I feel like there's a lot of potential scope for growth within this company, especially once the COVID pandemic subsides. So yeah, I'll continue to add into this as well. So overall, for my invest portfolio, as you can see, I've invested £570 and 76 pence, and I'm actually down by 17.84%, or £102 almost. One thing I want to mention though is £60 of those are free shares from you kind people who have used my link, and those are the shares I've actually sold and bought into these companies: Alpine 4 Technology, Galaxy Next Generation, American Battery Metal, and Corporate Universe. But I will also be adding my own money to these companies. So when I next get paid, I'll actually add some into these companies. But yeah, I thought that's just worth mentioning. Now let's move on to my ISA portfolio, and this is where I've got the majority of my portfolio. So as I go through my ISA portfolio, one thing you'll probably notice is the number of companies I've actually got in this has reduced considerably from my first month, because one of the things I realized was with the small amount of money I had invested, I was really spreading my money very thin amongst too many companies. So once I sold those companies, I actually only picked a select few and invested more of my money into those. And the first company is AT&T. So I'm currently down by 5.48%, £8.43. And as you can see, I bought back into AT&T when the price was quite high. But I do see that price bouncing back. With Boohoo, I'm currently 21.56% up, which is a great return, and for a total value of £60.78. One of the new companies I've invested in is a company called Check, and this is in the healthcare sector. And as you can see, I actually picked this when it was it's almost all-time high. But again, this is a stock that I feel like has got a lot of potential for growth. So I'll continue to invest in this and average that price down. And there's a very nice return on EQ Tech. I'm up almost 100%, and so I've almost doubled my return within this company. And again, this is a long-term hold, and currently the share price for this is 2.4 pence per share, and my average price for this is 1.2 pence per share. But I do feel like the scope for this company by the end of this year to go up to maybe 8p per share. So yeah, I will continue to add into this. And one of the other energy companies that seems to be doing really well for me is Fuel Cell Energy, and this is up 43.83%, or £13.15. And again, this is another company I really want to add some more shares in and grow. The next company is Garmin, and there's a very small stake in this company, £9.78, and it's currently down by 2.2%. And this is a company that's been giving me my biggest return. As you can see, I'm very happy with this. So I've got 229.5 shares within this company, and I've got an average price of $1.26, and it's currently priced at $4.32. So yeah, I've got a return of 234.23%, or that's £509.88 I'm up. So yeah, I'm very, very happy with that. And there was actually a time in the month when it went up to almost 300%. And I must say, I was very close to selling, my 100% worth of my shares within this, just to recoup my initial outlay. But I do believe in this company, and I feel like there's a lot of potential for growth. So I'm in this for the long run, so I'll continue to add into this. But maybe if it gets to where I believe it can go to, where it can go to a 10 times return, I'll probably at that point just take my initial amount out and then just let it ride as like free shares. So my next company I'm invested in is GSK. So with GSK, I'm actually down by 2%. So yeah, it's not a big deal. And again, this is a long-term hold, and it does pay a nice dividend. And my biggest investment is actually a company I've done a lot of due diligence on, and that's Heat Biologics. So this is a company in the pharma sector, and as you can see, I've actually invested the majority of my money within this company. That's so currently I'm down by £225, and that's an average price of $6.18 currently. But I must add, from my month one to month two video, the organization actually had a reverse split. So initially, the one share was worth, I believe at the time before the reverse split, $1.2. And since the reverse split, the price has gone down considerably to where the pre-reverse split price would be almost $0.85, I think. Yeah, so because the reverse split was 7 to 1. But yeah, this company is basically trading at an all-time low. I can show you here. So as you can see, this company is basically trading at all-time low, and it's currently developing a COVID vaccine, and it's got some other drugs that are in phase 1 and phase 2 development as well. And unlike some of the other pharmaceutical companies that are developing or developed the COVID vaccine, this company is using T-cell technology to help provide long-term immunity rather than the short-term immunity that some of these other vaccines are providing. So yeah, I feel like there's a big opportunity here, and I'm actually predicting this company to go to 4 times return by the end of the year. The next company I'm currently investing in is Hollywood Bowl. So with Hollywood Bowl, I'm currently up by 6.5% of £4.28. And again, this is a company I believe that has been impacted heavily by the COVID situation. And once the COVID situation subsides, people will be going out with friends and bowling. So yeah, this is a company I do believe in for the long term, and I feel like there's a space for it after the COVID. So yeah, I'll keep investing in that. And the next company is Intel. This is a very small holding, and I'm currently up by 7.6%. And yeah, I'll probably slowly add into that. And then the next few are like ETFs, and I invest within these monthly. So next month I'll continue to invest in these. So the first ETF is my iShares Automation Robotics. That's up by 0.5%. The next one is iShares Electric Vehicle and Driving. That's up by 2.4%. And the next one is iShares Global Clean Energy, which is doing very nicely. And considering it's only been a month, is up by 9.6%. And the next one is the iShares S&P 500 Information Technology, and this is currently down by 1.5%. And the next one after this is ITM Power, and this is again another clean energy company based within the UK, and this is currently up by 24.15%, and that's £24.83 total. And the next company I've invested in is Lloyds Banking Group, and this is currently down by 0.77%. And I've got quite a few shares within this company. And again, this is a company I feel like has been impacted heavily by COVID, and I do believe that this is a company that will recover. The next company is Microsoft, and there's a very small holding in this, which I'll continue to add to. Maybe not as much as some of the other companies, which I believe have a lot more potential to grow over the next 2 to 3 years. Palante is down by almost 11%, so that's minus £3.31p. But again, this is a company I do believe in, and the technology they use to formulate data, etc. And I do believe Palantir, with their software technology, has got a lot of potential to still grow. So this is a company I will continue to add to. And they did just recently sign a massive multi-billion deal with the NHS. So yeah, there's a lot of scope within this company for other institutions to add their technology within the organizations. The next company is Pfizer, and again, this is down considerably, at 10.41%, and that's minus £21.55. It's kind of strange because with them being the first ones to release the vaccine, there would be, more positive, reception within this Pfizer company, but that doesn't seem to be. It's for 3 months. The positive news was around December time and November, December time, and yeah, the price spiked and then it just went down again. And I don't know exactly why that is. Is it because the logistical issues with the vaccine, having to maintain it at such high, low, temperatures at like minus 70 or 80? So is it those logistical issues? Is it the fact that the virus strain, there's been reports of mutations and it not being nearly as effective against the mutated strain of the COVID, virus. I don't know, but yeah. But again, this does pay a nice dividend, and I feel like again there is some scope for this company to grow in the future. Pfizer's a massive company, and I do feel like again they're paying a good dividend, and I'm sure this price will recover, especially once they're more focused on some of the other therapies they're working on rather than just the COVID. And again, another clean energy company, and as you can see, most of the clean energy companies I've invested in are doing very well within my portfolio. So this one is up by 21.5%, which is nice, or £6.47. The next company I've invested in is Salesforce, and it's a very small investment, £9.53. The next company is Smith and Nephew, and this is a company I feel that there's a lot of scope for recovery once the COVID situation subsides. So yeah, that's £52.28 in total, and a return of 3.14%. Issue Regenix. This is a company that I do really strongly believe in, and I want to keep adding to this. And I feel like there's a lot of scope for a recovery to the share price once the COVID situation subsides, because this has been impacted quite heavily by COVID. And yeah, but currently it's up by 15%, and I do plan on continuing to invest in this. Maybe when the share price drops a little, maybe so in the next dip, I'll maybe add more to my portfolio. And the next three are Vanguard stocks. So a FTSE All World, which is 0.05% down. The FTSE Emerging Markets, which is up by 2%. The S&P 500, which is down by 1.5%. And another big holding within this is Zoe Medica, which is down by almost 19%. And this is another company I unfortunately bought at a high point, it seems. Yeah, as you can see, I bought this at a peak, but because it's a company I'm investing in for the long term, I'm going to average down in this. And I feel like again there's a lot of scope for growth within this company. And most of my companies are actually, as you can see also, I've got only 28 investments now, and that's down considerably from when I first had over 60 from month one. So yeah, there's definitely been some changes in that. And if I just click on investments, you can see Heat Biologics actually takes up almost half of my portfolio. So I'm not going to add too much more to Heat Biologics now. I'm going to, try to spread some of my money out now to some of the other stocks I'm investing in, and especially those that I'm currently on, the high negative values. So like Zoe Medica, I want to average down on those. So overall, as you can see from my ISA portfolio, it says I've invested 4,848.16 pence, and I've currently got a return of 4.36%, which isn't too bad, for a total value of £5,059.53. But it is worth mentioning my total return is actually higher than that, and the reason it's showing like that is because I sold a lot of my previous companies and then rebought those, or I returned from my initial outlay from the sales of those companies into new companies. So my actual returns I'll actually go through now. So my current cumulative invested amount is actually £5,020, and the total value of both my invest and ISA portfolio is £5,468.71. So this gives me a return of 8.94%. And all these figures are excluding the free shares I've received from you kind viewers who have used my link. But the total value including the free shares is £5,496.76, which gives me a return of 9.5%. But I'll always be more focused on the percentage return excluding free shares, because like you guys, I want to go through the experience of investing using my own money. So yeah, even though it might be a high return using the money from the free shares, it's not what I look at. I just look at my percentage returns from the amount I've invested in, and and that's why I created a pie separate called free shares, because I always want to distinguish that any money that's invested from shares I've received for free, I'm not really counting that as my money. I just want to focus on, like go through the similar experience that you guys will be going through. So, where you're using your own money and just trying to grow that. So to conclude, I hope you found this video useful. And please leave a comment. And finally, as always, please hit that like and subscribe button. As a small channel, it really does help provide support and help me grow.